Today we have markets analysis from Matthieu Jobbe Duval from Coinlist. Hello, Matthieu.
Hi, Nisa. How are you?
Good. So what's happening in the markets?
Well, it is a weird time for markets, I think, globally and also for crypto. It is very interesting to see that a major macroeconomic event of the magnitude of coronavirus, which by some analysis is way worse than what we had 10 years ago when the crisis was really very focused on the banking industry. The market at large, equities, bonds, seem to be living in la-la land where everything is fine, where the vaccine is about to come out in production and in your local CVS, and that really people are ready to go back to work and consume as if everything was normal. So equities are down only 5% in the last 6 months when you look at the S&P 500, which begs the question, what exactly is going on? What are people thinking about? The unemployment rate is skyrocketing. Retail sales are, describe really the numbers that we've seen in the last few months. So the question is, when is the market going to wake up to the sad reality of the crisis we're currently in? Crypto, in the meantime, has shown a lot of strength, a lot of resilience. Equities are down 5%, Bitcoin is up 20%, but equities are profiting from a lot of life support provided by the Fed. It's not the case for crypto. So very, very impressive performance, but it kind of feel like everybody really is looking for the moment when the market wakes up and things really get priced in the market. That moment has not come yet.
Now, Bitcoin has been hovering around the same range since last week's halving. What do you think about what happened with mining and the mining difficulty rate going down?
Absolutely. It just made sense that a week after the halving, just as normal, the difficulty would be readjusted, slightly lower, only 6% lower. A lot of actors in crypto were wondering what exactly is going to happen. All these less efficient miners, are they going to have to turn off, completely shut down their rig and put the key under the door? Turns out, not really. The rigs actually have been more and more efficient year after year. We're in a very different situation now than we were in 2017. So the efficiency, of course, the more efficient miners get more profit, get more hash rate for the same number of rigs put in their warehouses. But the very high price of crypto keeps the lower efficiency miner in business. The difficulty being readjusted just makes sense. You must have some marginal cost miners who are going to turn off. But by and large, the system is working as planned. The mempool has not exploded, as some people would say it would. And really, the Bitcoin network is showing the same resilience it has shown over big macro events that we've seen in the past.
So on March 12th, when we had Black Thursday and the correlation or safe haven argument fell apart because there was a lot of margin taking. Mm-hmm. What do you think now about the correlation between the macro and Bitcoin?
Yeah, so it's something people have been looking more and more at, because it's true, it's a phenomenal argument. Look, if we have an uncorrelated asset class to everything else, to equities, to rates, to EM, that's the holy grail. Everybody wants that in their portfolio, because whatever the performance, an uncorrelated asset in any portfolio lowers the volatility and hopefully increases the returns, which is what any portfolio manager wants. Now, in times of crisis, like what we had on that day 2 months ago, all correlations always go to one. It does not matter which asset you're looking at. Gold came up just as much as equity, just as much as Bitcoin. So saying, oh, look, on that day, during those few sessions, though that correlation went to 100%, that makes sense. That's what everything does. People are panicking. People are hitting the sell button across their portfolio. So I don't really see that as a big, oh my God, we completely failed the store of value narrative, which, by the way, is in its nascency. It's the very, very beginning for Bitcoin to maybe become an asset class. We're not there yet. Yes, GBTC has seen more and more inflows. Yes, institutions are definitely looking more and more at Bitcoin, the Paul Tudor Jones story and Renaissance and so many others. But this is still very much the baby steps of an asset class. So yes, the uncorrelation has not played out as strongly as we wish, but this has to be seen across weeks, not in the last couple of months. It has to be seen historically, and that's how our portfolio managers are going to look at it when assessing, should I add Bitcoin to my portfolio or not?
All right, Matthieu. Well, thank you so much. We look forward to seeing what happens next week.